Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the gold market. So you can see market is squaring around our resistance area that we have specified. It includes actually OP target and has been reached recently, but also we have mentioned that actually this is agreement resistance. So OP stands very close to the Fib level, 1886, and also is accompanied with the daily overbought around 1888. And as we said, that might be some volatility around the market due to release of the FOMC minutes statement. So if you consider taking the short position, it would be better to hide stop above 1888. And indeed, as you can see, recently some spike has followed here, and then market returns right back down. So currently on the gold market, we have two different moments to keep an eye on. In fact, in a bit longer term perspective, on the next week probably, we have here, as you can see, the high wave pattern. This is doji, high wave doji. And this has been formed, and mostly it indicates the indecision. This is not a directional candle, as you know, and market usually follows in the direction of the breakout. So it means if market taken out of these lows, it will move lower, at least for the same distance as the pattern stands. So it will be somewhere back to the 1820 area, approximately. In the case of the upper breakout, we probably are going to the 1922 next resistance that we have. That's what we have on the daily chart. Trend stands bullish, so everything stands really good. But some risk exists that retracement might be a bit deeper than just a minor reaction here. And in general, agreement level is rather strong, and it's normal when the market shows a bit deeper pullback out from there, especially when it hits the OP target. This is not some minor extension or something of that sort. This is major daily OP, where the reaction usually should be a bit deeper and stronger. It will be normal if we will see some stronger pullback here. On the 4 time frame chart, overall price performance around the high wave pattern takes the shape of some widening triangle. Here there's multiple scenarios that we could consider. For instance, it might be some kind of the preparation for a drop in the shape of some diamond or something of that sort. So market will be ping pong around this level first and then shows a bit deeper retracement. That's also possible. Maybe some other patterns will be formed. We do not know whether it will be. But take a look at here, this fast action. Market has formed a bearish grabber here, right on top. This is, specific type of grabber. This is not normal. I prefer personally the grabbers in a direction of the trend. And here, as you can see, with this upper direction, it's more in opposite direction. So it's mostly bearish. Some kind of final effort to the upside and then downside bounce here. Chance exists for a bit deeper retracement here as well. On the hourly chart, you could see that with this drop, market has completed some kind of the cartridge steeple to sell ABCD retracement right to the 618 resistance, 1880. Now stands in the downward direction. So we have the ABCD OP around 1850. XOP around 1833. So currently it's a major question whether the market will go lower or not. For the daily traders, as I said, nothing has changed. So since we stand still on the resistance, we intend to sit on the hands and wait for a reaction on the resistance. So we are watching for some pullback. If you would like to go short, if you haven't taken a position recently, here I think that you still keep the stops still above the A point. Despite that we have in place this pattern and market already that's the 618 level, because don't forget about the possible pattern that we have mentioned here. So market could show significant swings inside of this range before some downside action could happen. That's why initially, if you intend to go short, it still makes sense to keep stops somewhere above the A top and watch what will happen around it. Once market will start dropping, well, maybe it makes sense to move stops to the break-even. So that's minor tactical spots setup. And finally, when the market will out of the range of this action, which is a high wave actually on the daily, we could set more extended plans. For instance, if market will drop here right back to the OP, start breaking it down, we could say, right, we could keep the shorts with more extended action to the 1820 area. The same we could say for the daily traders to sit on the hands and wait for a deeper retracement. In the case of the upward breakout, well, in this case, market probably will go to the next resistance around 1920 area. So really it starts to search chance to go long on a minor pullback. So that's what we have currently on the gold.